Sunday night, May 8, the market continued to fall, and now there's some fear starting to come. And people are wondering, is this a bear market? The good news is, when an event like that starts to transpire, there's a good chance the market will stop falling, just because it tends to be a contrarian reality. The market tends to do the opposite of what most people think. However, it's not yet ready. So the long term, we're still thinking bear market. The intermediate term, we're still thinking probably weakness continuing through late June, early July. And the short term, however, we're looking at potentially an up week starting this week. May 9th or the latest May 10th would be a low, and May 12th or 13th, the end of the week, would be a high, and then it would continue down potentially till the 16th or a little bit later than that the following week. What we'd like to see is this 39.50, potentially a little bit lower prices than we've seen so far before the market can really release and rally. And as long as it doesn't reach 39.50, and by the way, 38.50, which is not very far away, would be a 20% correction, and everyone would be talking about a bear market is underway and such. If that did happen, it's unlikely that the market will go lower, that most likely people will buy it at that level, because there's ultimately a contrarian tendency in the markets. As soon as people realize it's a bear market, it'll seem to stop being a bear market, at least for a few months. So we're looking for ultimately continued decline until June 27th or July 16th, a rally over the summer until September, potentially September 2nd or September 18th comes up as another potential high point. And the short term, we're looking for a bounce this week, followed by a further decline next week. Somewhere between now and the late part of June, we do expect to see the 38.50 area reach. The momentum oscillator is still not fulfilled on the downside. More downside is likely to come. However, the second half of May is possibly going to be bullish. After June, and then we're looking for a strong summer rally up until Labor Day, but we're expecting that new highs are out of the question. We're not going to see the January 4th high or the May 30th high come in. By the way, if you find these recordings interesting and you feel that they're helpful, it's useful for us and the algorithm that YouTube has. If you give us a thumbs up, the more thumbs up we get, the more the algorithm puts emphasis on our site and brings people to it. Now, what was really interesting and what we found to be exciting was the Federal Reserve raised interest rates a half point last week, which of course was expected. Now, the interesting thing is we've been looking at the 22-year cycle for weeks. We've been talking about how it seems to be repeating exactly. And then the Federal Reserve increases interest rates by a half a point. And the last time they did that was exactly 22 years ago, exactly where our pattern recognition and our astrological insights had located the present market. So there's a good chance that the 2000 market, or a very close variation of the 2000 market, is repeating, and you can look at that market and see what it did back then and see something like what you're likely to find going into the future. On that note, have a good trading week, and we'll see you soon. Thank you.